According to a Reuters study, around 130 countries globally are now exploring central bank digital currencies or CBDCs. This represents approximately 98% of the global economy. Nearly half of these countries are in advanced development, pilot or launch stages of digital currency initiatives. The central bank digital currencies are not just a futuristic idea anymore, they are rapidly becoming a global reality. And with countries worldwide diving headfirst into the realm of CBDCs, it signals the immense potential that regulators and financial players anticipate that this digital transformation holds. In a world where transactions are hindered by intermediaries and border restrictions, CBDCs are emerging as a beacon of a potential solution that promises faster, secure, borderless transactions and potentially revolutionizing government payments. But let's be honest, there have been a lot of concerns and bad press over the privacy, regulation, and financial stability of the technology, which have shrouded CBDCs in uncertainty. Yet, despite these challenges, one thing has become increasingly clear. CBDCs have moved from a potential outcome to an unavoidable certainty, and it's no longer a question of if, but when. But here is where the exciting opportunity lies. For those who dare to explore, understand, and overcome the complexities of this technology in its early stages, the potential rewards are colossal. Getting in early not only means being at the forefront of innovation, but also having a say in shaping the narrative of tomorrow's financial ecosystem. So in this video, we'll explore central bank digital currencies, demystifying the truths, dispelling the myths, and showcasing the benefits it holds for individuals seeking faster, more secure transactions and institutions craving efficiency and transparency. And most importantly, we'll show you how innovators, fintechs, and financial service players can seize this transformative opportunity and unlock the barriers, understand the intricacies, and ride the wave of a potential financial sector revolution. If that sounds interesting to you, then let's dive in. Hello friends, welcome back to the channel. My name is Jeremy, and if you're new here and haven't yet subscribed, please consider doing so because on this channel I speak about fintech, digital transformation, personal and career development. A central bank digital currency is a digital representation of a country's official currency issued and supported by the national central bank. Unlike decentralized cryptocurrencies such as Bitcoin, CBDCs are centralized and backed by the government or central bank. CBDCs function as legal tender usable for transactions but existing exclusively in digital form, designed to offer the advantages of both cash-like privacy and secure digital transactions. Central bank digital currencies are not cryptocurrencies like stablecoins, although there are some similarities. Now, unlike cryptos, CBDCs are not decentralized and their value is not subject to the same level of volatility. Now, unlike stablecoins, CBDCs are not backed by a private entity or asset, but rather the full faith and credit of the government or central bank. While CBDCs are intended to offer a degree of privacy, transactions are recorded on a ledger and can be traced back to the parties involved. What CBDCs offer is more pseudonymous transactions where users are identified by a unique identifier rather than their personal information. This allows for balancing privacy while allowing for a level of traceability. Now, the reason why the noise around CBDCs has intensified in the last few months can be attributed to prominent international entities like the IMF, the World Economic Forum, the Bank for International Settlement, and the G7 all getting involved. The BIS worked with a group of 7 central banks to publish a new set of reports emphasizing the ability of CBDCs to foster innovation whilst preserving the best elements of the current financial system. The G7 also released its principles for retail CBDCs, setting out a common set of considerations for public policy implications. The IMF, after conducting extensive research on CBDCs, had their managing director Kristalina Georgieva stating in a conference that the IMF themselves are working on a global CBDC platform. Countries like Nigeria, the Bahamas, and Jamaica have already launched the e-Naira, the Sand Dollar, and Jamdex, which are their respective CBDCs. And with the potential to use CBDCs in cross-border payments, there is clearly a need for cooperation between the countries. Due to the concern that the absence of a common platform or poorly designed CBDC regulatory processes might lead to financial stability, data privacy, and integrity risks, the IMF recently published an outline for a CBDC handbook that addresses the foundational requirements such as legal considerations, design process, technology approaches, and and much more. Now, the World Economic Forum also put out a white paper in June 2023 on CBDC global interoperability principles, where they make several recommendations for the success of CBDCs, such as partnerships and collaborations between the central banks and private sector to leverage existing payment infrastructure. They also recommended regulatory consistency for policymakers, regulatory sandboxes and innovation hubs to allow experimentation with CBDC interoperability, and lastly, education and awareness for all stakeholders to garner support, encourage adoption, and address concerns related to privacy, security, and financial inclusion. Now, all this attention from global players has shined a spotlight on the potential of CBDCs as the next iteration of the financial ecosystem. Now, it's impossible to speak about CBDCs without addressing some of the concerns shrouding the technology in uncertainty and doubt by lots of stakeholders. One of the most popular arguments against CBDCs is that it allows governments to control, spy on you, and control your money. And the reason for this assertion is the fact that CBDC transactions are recorded on a transparent and traceable ledger. However, this is a measure to ensure compliance with regulations, to prevent illicit activities, and enhance transparency. The transparency is aimed at creating a more accountable financial system and not to infringe on individuals' privacies. For example, for people relying on government social assistance programs to provide for the basic needs of their family, a program facilitated through a central bank digital currency would ensure that financial support reaches them in a more secure and transparent manner. The recipients wouldn't have to queue up at government offices to collect cash assistance, and they could simply log into their account and see every transaction, making sure what they're receiving is accurate. Also, their privacy remains protected because the digital wallet is linked to a unique identifier, safeguarding personal details while allowing seamless access to the funds. The CBDC system strikes a balance between transparency and privacy, giving individuals the confidence that their financial transactions are secure and traceable when needed. The next concern that is usually raised is that CBDCs exclude unbanked populations and are only suitable for developed economies. Now, if you look at the three examples we gave earlier, where the Bahamas, Nigeria, and Jamaica have launched their CBDCs, then that in itself defeats the arguments, since neither of these three territories are considered developed economies. The misconception that CBDCs exclude unbanked individuals in undeveloped economies typically stems from the assumption that it's based on the blockchain and requires internet access. However, central bank digital currencies can be designed with inclusivity in mind for underserved populations. Central banks are collaborating with local community centers and mobile network operators to provide digital wallets even in villages. These wallets can be accessed through feature phones, which are widely available even in remote areas. Simplified user interfaces designed with simple graphics and minimal text ensure that individuals with varying levels of literacy can easily navigate and use the platform. And in recognition of the lack of internet access, central banks are establishing or leveraging physical access points, what we call an agent network, to allow individuals to convert physical cash into CBDCs and vice versa. Now, these agent points are local shops acting as a bridge between the digital and physical worlds. Now, if you take Ghana for example, the central bank is exploring its version of a CBDC called the eCedi. However, they're designing it with the mass market in mind. Because of this, they partnered with a local fintech and mobile network operator to pilot and test the eCedi in one of the most rural parts of the country. If they can solve for its utility in such a location with low literacy and minimal internet access, then they can roll out to the entire populace. So with the right design, collaboration, and education program, CBDCs can definitely solve for financial inclusion in emerging and underdeveloped markets. Now, there are multiple foreseen benefits of CBDCs to different ecosystem stakeholders. For central banks, it provides them with a more direct and efficient tool for implementing monetary policy. It also provides them a tool to combat anti-money laundering by monitoring transactions to detect and mitigate illicit activities. The real-time data that CBDC transactions generates allows central banks to gain insight into economic trends, consumer behavior, and spending patterns, which facilitates more informed decision-making. Central banks can use CBDCs to facilitate cross-border transactions, eliminating intermediaries and reducing transaction costs. And finally, CBDCs encourage central banks to embrace technological advancements, fostering innovation and digital transformation, which we desperately need from regulators in the financial sector. And a lot of these benefits carry over to banks and fintechs as well. CBDCs provide fintechs with a standardized digital currency framework that can be seamlessly integrated with existing or new financial products and services. The integration simplifies simplifies the development process and accelerates the launch of innovative solutions. Real-time settlement through CBDCs will allow banks to manage their cash flows more efficiently, reducing counterparty risk and reducing the need for excess reserves, which improves their overall liquidity management. Also, it's a great opportunity for both players to create alternative revenue streams by offering value-added services such as credit, savings, or insurance on top of the CBDC infrastructure. And CBDCs also create more collaboration opportunities between banks and fintechs. They can partner up to develop innovative applications such as programmable money or smart contract-based services, creating a dynamic ecosystem of financial innovations. Now, there are definitely lots of challenges that need to be addressed for CBDCs to be adopted in a widespread manner for mainstream integration. The hurdles of privacy, cybersecurity, adoption, and regulatory alignment definitely exist. However, these should not be viewed as roadblocks, but rather as rallying points for collaboration and innovation. By joining forces to design robust technological frameworks, prioritizing user education, value-added products and services, and establishing standards for interoperability, the stakeholders who get in early can collectively pave the way for CBDCs to flourish whilst also reaping the first fruits of the technology's revolution. Players that join in early to build on the CBDC infrastructure stand to benefit from early market leadership and gaining a competitive edge and reputation for driving transformative change in the financial industry. Those who contribute to shaping CBDC regulations and standards can advocate for frameworks that align with their strategies, thereby minimizing potential future regulatory hurdles. They can tailor CBDC-related solutions to address specific challenges, positioning themselves as problem solvers for their target market's unique needs. Investors are also likely to be drawn to organizations actively driving CBDC innovation, potentially leading to increased funding and growth opportunities. Now, in my previous video, I spoke about a unique regtech that was making strides in the sector by creating enabling platforms for collaboration, particularly as it relates to central bank infrastructure innovation called Emtech. Now, if you want to be an early innovator in the CBDC ecosystem as your path of entry into the fintech world, or you simply want to reap some of the potential benefits that we've just outlined, then a partnership with Emtech would be the best route for you. Now, Emtech has recently launched a CBDC Innovation Toolkit. Now, this toolkit is a first of its kind turnkey solution for financial service providers to explore the possibilities and build new business models that can be built with a tokenized version of cash in a Web3 world. From financial inclusion to e-commerce, lending, payroll, or cross-border interoperability, anything that you could solve for if cash wasn't digital is available to explore with the Innovation Toolkit. What this Innovation Toolkit does is it gives you access to a simulated CBDC called Beyond Cash or BYDC with a set of features and pre-built APIs that can be used to discover new business models with Central Bank Digital Currencies. It's built primarily for players in the financial sector like banks and fintechs who want to get ahead in the CBDC innovation journey or explore possibilities that lie within the space. I took the time to check out the Emtech website and navigated through the CBDC simulator on the steps to seamlessly integrate the CBDC API. Now here's a summary of that snippet. Now the website is quite intuitive and easy to explore. Finding my way to the CBDC simulator was fairly easy. So let's go to the home page and then select Digital Cash. Now the first thing to do is to select a CBDC plan and to subscribe. Now there are three main plans. The first is the Startup Innovation Plan with a yearly or quarterly option. Then you have the Partner Innovation Plan and the Enterprise Plan. So the difference between the plans is essentially the level of support. Partner and Enterprise plans offer you dedicated support and more hours for the design workshop, and you also get 100,000 API calls and more institutional wallets with the Enterprise plan. That sounds like a good deal. Now, once you select a package, you can now proceed to integrate with the CBDC API by navigating to the homepage of the Digital Cash section for the Quick Action menu. So the API simulator page can be found under the View Documentation option, and that brings you to this page where you can see your client ID, wallet ID, and your secret key. So the details of the API specifications can be seen after you click the View Documentation. Now there are more detailed instructions in the documentation to complete the integration process. Now once you're done integrating your CBDC API, you can view and monitor wallets and transactions on the dashboard. You just click on the Go to Dashboard option from the Digital Cash homepage. Now, this is a really futuristic looking dashboard. So from here, you can view all your transaction metrics and wallets, trended and most recent transactions, and you can effect a wallet transfer between your institutional and end user wallets as well. You can view all the wallets that you have in this wallets page, both institutional and end user wallets, with all the details of the wallets and details of the transactions that have happened on the wallet, and you can make transfers between both wallets. And if your goal is just to understand the space as an ecosystem stakeholder, then this innovation toolkit provides great resources once you sign up to provide clarity on what CBDCs could mean for your business as a bank or a fintech. Emtech's BYDC is not a live CBDC, it's not issued by a central bank, it's created essentially for testing purposes. Because central banks are expecting CBDCs to become a new payment rail, there is a lot of opportunity for startups and fintechs. You don't need to be a licensed institution to access the innovation toolkit, and it's open to all in preparation for official CBDC launches. I'll leave a link in the description below so you can check it out and potentially sign up to get in early and ride the wave of the CBDC opportunity as a front runner. So friends, there you have it. The promise of CBDCs is exciting. As we embrace the potential benefits and navigate the challenges, one thing is abundantly clear. The CBDC revolution is not a matter of if, but a resounding when. By delving into the forefront of innovation, banks, fintechs, and visionary minds can carve out their positions as pioneers of this digital wave. There are opportunities and obstacles, but those who seize the moment to innovate, collaborate, and craft solutions to the existing gaps will be the true victors. So take advantage of the platforms that exist to gain a head start. I hope you found this video valuable, and if you did, remember to hit the like button and leave me a comment, and I'll see you in the next video. Cheers, guys.